Welcome, Jordan. Nice to see you again. How you
Thank you.
doing?
Nice to see you. I'm well, thank you. How are you?
Yeah, all good, thank you. All good. So we are we're here today to just talk automations, basically, right? Kind of we'll give a quick introduction to automations. Now, obviously, on Summer.fi, automation is a huge part of what we do here at Summer.fi. Jordan, in your role as kind of UX researcher and kind of within the product team, you obviously speak to a lot of users about automation. I know you're a big automation user yourself, as
Yeah,
am I. Um, and yeah, we want to spread the word about automations. Why they're so good on Summerfy, what
you've cut out for me.
individually they each can do, and yeah, how you and I use them. Because I know from the probably over 100 hours of conversations we've had internally around automation and different automation strategies. We both use the same automations, but we use them in different ways, and so on, right? Like how you use it is not how I use it. What I want from it is not necessarily what you want from it. But we always end up at the same product that we're using. So yeah, so let's jump in. So why don't you tell me to start with, like, what are automations in general, and then on Summerfy and so on, like in kind of your mind.
Yeah, so for me, automations, I always think about, or I think it's a really interesting like start to the automations for me. Maybe that's an interesting background. So for me, I started using automations on a different place, basically. And I was really apprehensive about them at first because in DeFi, it's all like, especially if you're doing this stuff from your own wallet non-custodially, it's like, well, I want to be the only person in control, obviously. And with automations, there's all of a sudden not just another person in control, but like this like smart contract that can do things on my behalf. So it was really important to get over that first hurdle of like, well, what can these things actually really do? How safe are they? These type of things. So maybe that's something we can touch on. Um, but then when I did start to use them, and I realized that okay, the ones that I were using were pretty safe and this type of stuff. It was really about being able to like um, automate my decisions, like make a decision at one time, and then have a smart contract, have a program basically do those things for me, which is very powerful, or was very powerful, and still is very powerful. But you had to really be sure, and you still today have to be really sure, like that you know exactly what you're getting into. And I think a lot of people that were using automations at that time before, maybe a few years ago, had to learn the hard way. Like had to learn like, okay, this is maybe getting a little bit out of control. Now I need to turn it off, or I need to I need to understand these parameters a lot more. But yeah, so that's kind of what automation is to me, like being able to really take your decisions and understand, hey, this is what I want to have happen, and be able to automate that away. And then you can just go and do whatever you want to do. You can focus on what you actually want to focus on instead of being, behind your computer, or like fumbling with your wallet, or like trying to sign a transaction. Like none of that. It's
Yeah.
that's all done for you. What about you? What do you
And
think about
those
automation?
and just on that tiny little bit quickly then. So you talked about when you first used automations, and how the kind of automation journey started for you. And back then that was just a kind of buy on the way up and sell on the way down, right? That
Yeah,
was what the automations were a couple of years ago. Really?
yeah. Exactly.
Yeah.
So
Okay.
both for myself, that like that was my experience of like uh buying on the way up, selling on the way down. And I messed that up a lot being doing that, which sounds kind of obvious, but it's like in the moment you're like, oh well, I'll be able to stop at the right time. I'll be able to stop at the right time. So yeah, we can talk about how at Summer like we've sort of innovated on top of that a little bit. But when you talk to customers, or like I have talked to in the past, what you hear them say is that, hey, these automations do basically the opposite of what I want to actually do. They buy the top and they sell the bottom, which is can be true. And maybe we can talk about the way that you can actually use those ones, or like buying on the way up or selling on the way down, to actually your benefit, as opposed to as opposed to your detriment, especially as we enter a new bull market.
Yeah, absolutely. No, that sounds great. And like you said, like yeah, we've kind of got a long history of automations, whether it's pre-summer and both using them kind of in DeFi, or and now like kind of the new ones that are used today. But can you give us a quick summary of like, yeah, how exactly do they work? Like, because this is all on chain, all on chain automations, all self custodial automations, right? So from a user point of view, you're not giving custody of your funds to anyone else. You're not handing your private keys over or anything like that. How exactly do they work on Summer.fi in particular?
These automations is, as you said, you're not per se giving up control of your assets or anything like that, which I think, again, is a big hurdle for some people when they get started with automations. This notion of, hey, like, am I just giving up control of my assets, and they're being able, like, these contracts, which is kind of what we're doing, is you have these smart contracts that you're setting up basically these triggers and stuff like that are able to execute very specific actions on your behalf, and nothing more than that. So they're just being able to, hey, your LTV or something like that is at this very specific threshold or point that you specifically set by you, so nobody else, and it's very like rationally, very objectively just making these decisions, I guess you could say, but they're your decisions that you've made, and they're just executing them for you. So they can't do anything like steal your funds or anything like that. They're really smart in terms of like you setting them up, but they're really dumb in terms of being able to like say, oh, like let me just do some weird thing that results in the funds of a user lost or stolen or something like that. So yeah, that's kind of how I would think about how they work. But curious how you maybe explain a little bit more succinctly or technically sound.
Yeah, I think the key thing from my point of view is they use on-chain oracles as well, right? So like that's kind of where they're getting the price beats and so on from. So depending on the protocol it's used, whether it's Aave, Maker, Spark, like they use the oracles in the underlying platform. I think, which is key and always super important, particularly if you consider the kind of some of the automations we offer are there obviously to protect you against liquidation or protect you from downside and so on. And sometimes that liquidation can happen if a protocol gets a bad price from a bad oracle or something like that as well. I don't think it's ever happened. But obviously it could. I think we all remember the kind of the flash crash of DAI. I think it was on Compound, 2019, 2020, and it liquidated a lot of people when they just used I think it was a Coinbase oracle at the time. But yeah, the underlying oracles are important and they're there. But yeah, I think you hit the nail on the head though about like kind of it's a smart contract. It's set up by the instructions of you as a user, of the private key owner of the wallet. And it can only perform those actions, and that makes it extremely powerful as well, because you don't have the fear, I think, then of like, well, what if they don't, like, what if someone on that side isn't awake or anything like that? There's no concept of another person executing this for you. It's not like a guardian or anything like that, or a fund managing your money. It's entirely automated at that point. But I think let's dive into some of the automations, because I think that's the kind of juicy bit in a way. And let's start kind of at the beginning. So the first automation we launched at Summer was stop loss. It was an automation at the time that hadn't really been done in DeFi before. Like we said, when we first started kind of talking and designing the automation stuff, the only options were kind of buy on the way up and sell on the way down. But I think you had a lot of conversations with people around stop loss being like such an important feature, right? And I remember the day we launched it, we had like hundreds of users enabling it on the first day, like, or the first couple of days. It was incredibly popular, and absolutely needed in the market, as still shows today. It's still our most popular automation feature. But what exactly is stop loss to those of people that don't know or haven't heard about it before?
Yeah, so stop loss is basically the easiest and most effective way to protect the downside in your position. So, I mean, maybe that sounds like some like marketing or something, but like it's really about protecting yourself from losses, unnecessary losses. So, both in my own positions, I think you're in your positions too, and talking to like a lot of different users and stuff, like one of the biggest apprehensions to starting or opening a position, a borrow position, whatever it's for, whether it's just to get liquidity, whether it's to do some very specific strategy, is this notion of liquidation risk. And the auto sell from the other automations before, and even that some people still use today, is like, well, does the auto sell really protect you from these losses if it can just sell all the way down to some extremely low irrational price? Not really. And this is what we heard from talking to users, is like, you know, I'm using this auto sell to help me to protect against liquidation, which it does. But at the same time, like, well, if the price goes down a lot relative to what I thought, you still have to go to the position to kind of manage it, to say like, okay, this is too much now. I need to really start to think about, how do I save my position? How do I save the collateral that I started with? And that's where the sort of genesis of stop loss came. Is like not a new idea by any stretch of the imagination. It's like a very traditional thing, or very like common thing in traditional finance to have. But just in DeFi, nobody that I know of at least really was introducing it, especially for these DeFi protocols. And simply what it does is, hey, you set a stop loss LTV, and relative to that is a price. And that price changes a little bit because you might make changes to your position and stuff. And that price is, you're basically saying, hey, I'm willing to, this is where I'm going to cut it. And yeah, that's very powerful to protect against liquidation, but also losses. Yep.
And on that then, so the LTV is the constant, right? So you set your or collateral ratio in Maker, but when you enable a stop loss, you set it at a fixed LTV, let's say like 70%. So you can continue to make changes to your vault, and regardless of what kind of the prices are, the liquidation prices are, and so on, like your stop loss will always be at that 70%, and within the UI it will just show you your current kind of, I think we call it the dynamic stop price, right? So which is like based on these changes, this is your dynamic your dynamic stop price for that one, right? Which is really, really cool. And I think the other interesting thing, and this is where we I think we disagreed literally from the first day we started working on the kind of design of it, right? But we allow users to stop to collateral or to debt. Right, and in most cases, the collateral is kind of like a ETH or a liquid state, like derivative of ETH or wrap BTC or something, and then typically the debt is a USD. For most users that we have users going the other way, on short positions and so on, but typically what we see here is you can stop to collateral and debt. Now I know we have the complete opposite feelings on this, right? And I remember when we were choosing these options and ultimately how we ended up with both options available is because we had very different views on how users would use this, right? So what do you do? What like you said you've got a stop loss enabled. I've definitely got a stop loss enabled. I think probably more than one.
For me,
but what do you stop loss to?
I'm a stop loss to collateral person, and I think that's mainly because I'm like I would say I'm a fairly anxious person, to be honest. So that's why I probably use stop loss. My stop is fairly conservative, I would say. And what gives me anxiety around being stopped out is that I won't have exposure to this, in my opinion, ETH, this beautiful collateral, this incredible asset that will probably go up forever. I mean, not really, but for a long time. And you never know what's going to happen. So I don't want to stop to USDC or stop to DAI, and then, what do I do? What happens when the price of ETH goes up for me, or wrap BTC maybe for somebody else, or whatever for somebody else. I want to be able to always have exposure to the collateral that I love so much, and that that you've accumulated over time. So it would be really sad if you that you stop to DAI or stop to USDC, and then you have this USDC, like you can get USDC anytime or DAI anytime.
Yeah.
And it's always supposed to be the same price, but sometimes that's not true.
Yeah. I see. I've always found this fascinating, and ultimately that's why we're having these kind of discussions today because of this different thing. Because I have the exact same feelings of you around kind of like super anxious, and I've got positions open, particularly when I use the multiply product quite often, or like generally probably I guess from a greed point of view, but with the entire safety net of a stop loss. However, I stop loss to debt, which is typically always DAI or USDC. Every single time for the exact same reasons you do, but for a completely different outcome. And it's interesting how you phrase that because I've been stop lossed I think 4 or 5 times because I have my stop loss very close to my LTV. So I think typically one of my positions at the moment I've always kept at 60% LTV, like a 2.5x exposure, but I have my stop loss set at 64%. I think I had it at 62% for a little while, and I think when I got stop loss twice in a week, I was going like I moved it a tiny bit further. But every time as the prices go up, it resets back to 60% regularly. But now my stop loss is at 64. But my deep fear is suddenly kind of we have a 2021 moment or a Black Thursday moment. A 22 moment like the Lunar Terror 22 moment in May June time, or we have a Black Thursday moment. Like kind of in March 2020, when the ETH price falls so quickly. And I think about, I maybe wrongly, right? But I think about like all my portfolio in dollar terms. I always look at the dollar amounts. I don't actually know how much ETH I have, though I have a load of ETH or whatever, but I know about it in dollar terms from that point of view. And I think my biggest fear was what kind of got realized in May and on Black Thursday as well, where you just suddenly saw the dollar value just dropping. And I feel like if that was to happen in the middle of the night for me, or if I'm out driving, or like my wallets are at home or wherever they are and so on, like if that happens and I've been stop loss collateral, I'm in no safer place in my mind. Like for that, but that brings it to an interesting point because you just said it, and it really brings it home that I've sacrificed like some ETH in my position because I've been stop lossed, and I've been stop lossed on a dip several times, kind of a little dip in the market. I've been stop lossed to debt, and then the price has risen, and then the price has continued to rise. So I've had to reopen the position from fear of missing out even further. But obviously the amount of ETH I've had to reopen that position with because I'm at 2.5x or whatever is now less ETH than the ETH I had when I was closed at, because actually the price is even higher than when I was maybe like at before even the little dip, particularly relevant in the last kind of few weeks or months and so on, really, as the market's been going up, because the market always has these dips in it. But like it's like I love that, like you talk about it, like you go to collateral because of the anxiety, and I go to debt because of the anxiety, and yeah, it's like there are market conditions where you win and there's market conditions where I win, right? And it's so difficult on that. But keeping on the theme
one
of
quick question there. How do you? So one, I think is maybe good to articulate. Like, sounds like your goal is a little bit different than mine too. Maybe like my like if I never had to close a position, I would be cool with that. Basically, like I just want to protect against very specific huge drawdowns, as you were kind of saying, in the worst case scenario. So I'm cool to just continue like accumulating, in my case, ETH over a long period of time in these positions. So that's kind of one question, like how do you think about the long term or the goal in general? And then how does that, like, how do you think about, or how do you reason about setting up the stop loss LTV?
Yeah, so I think to the first question, like kind of what is the goals and so on, and I think what you mean by that is just like the goals of crypto and so on. Like you said, if you're just accumulating like crypto and ETH and so on, and the different tokens there, like you're going to be happy. I guess I look at it in dollar terms almost from a slightly different perspective in that sense, where it's kind of like it's pretty stressful, like doing all of this kind of like stuff, like whether it's working in the space, like you can't help but like see the prices like multiple times a day, regardless. And I think from my point of view, if the prices are going up and the value of the crypto that we hold is going up, I also want to be in a position where I can make use of that to do something fun and enjoyable with, and have something maybe material that isn't just like magic internet money, basically, on a computer screen. So from that point of view, like I always kind of want to make sure that like, okay, I'm in a position, I have maybe these dollars, like, and I want to try to be able to do something with it, but not so much where like I just withdraw it all. I'm not in the kind of withdraw it all and buy a Lambo as soon as I hit the Lambo mark, right? It's kind of I want to keep that market exposure like as much as possible at all times, and like it's another reason why like half my portfolio is just the ETH yield loop stuff with extremely low liquidation risk, but that's always exposed to ETH at that point. Like there is no like kind of escaping that to like to USD tokens or whatever. So I see this other side that when the market is going up, I'm kind of in a spot position in the yield loop positions, and then I'm trying to like outplay the market with the multiply positions with the various automations turned on. But I look at those in dollar terms to be able to eventually take some out to go in and enjoy them, like create some material things in them as well, and that actually feeds into the fact of how I set my LTV. So like I said, I set it normally very close to where my position is kind of being open. Like I use all the tools available to me on Summer to manage my positions. So like I said, I keep it at around 2.5x. I don't know why 2.5x. It just feels like a nice round number for me. In reality, it could probably be 3x with the trust I have in the automation and the stop losses and so on in there. But it feels comfortable. But then I have my stop loss just a couple of percent from in LTV terms, like 4%, which is I can't think right now of the actual number, but I think it's about a $400 drop. In reality, maybe $300 drop, and so on. But ultimately, because like if you think of the chart going up and I'm keeping it at 6%, keeping it at 6%, it's always only has to drop a little bit to 40. Like I'm getting out in profit regardless at that point. So when I kind of use a stop loss, I'm literally using it to stop any losses in reality. Because if the market does just drop and this is the end of the bull run, I'm out. Like at that point in those positions at least. And I'm taking that profit, and I'm like, I'm done. I'm not going to wait for the price to drop 20 or 30%, particularly at 2.5x at that point where it's going to be like kind of multiplied even further. Like I'm enjoying it on the way up, but I'm getting out. At least in those kind of volatile exposure markets, pretty fast. But I just want to move on a tiny little bit because we just launched trailing stop loss a couple of weeks ago as well. Like the next iteration of on top of stop loss works a little bit differently. I've certainly used the normal stop loss as a kind of manual trailing stop loss in some senses. But talk to me about trailing stop loss. What's the difference? Where do users use it differently? I know you and me have like wanted trailing stop loss for a long, long time. I mean, internally we had to like kind of build a new automation system to be able to like allow it to be built and so on, which we're super pleased now to say we have, and we've got these super like, and we can talk about some of the newer like strategies we've got now using this new advanced system. But yeah, tell me about trailing stop loss. What is trailing stop loss? What's the core like user value, and why is it different, better, or worse than normal stop loss?
Yeah, so I think it's in terms of better or worse, definitely a little bit subjective, but I think the genesis of it really is, somewhat talking to users, but also like, we have there's obviously a lot of on-chain data that you see, and we have in our Discord some different channels and stuff, and you see people kind of both on the UI, which you can go to any vault and you can see kind of what's going on in the history and stuff, and you saw people like doing kind of exactly what you were saying in a way, is, hey, the price is going up, let me move my stop up. Hey, the price is going up, let me move my stop up. Hey, the price is going up, let me move my stop up. And it's kind of like, why are people doing this? And it's kind of exactly what you were saying before, in a manual way, like moving their stop off in order to capture these profits. In the case that the the price does come back down, and then you'd be stopped out, and you would have that delta that you would capture in terms of profits. And that's basically what trailing stop is like you're just creating a constant distance between the stop loss and the current price that you can set whatever you want, more or less. And we have it on the UI in terms of price. I think we thought of that as being easier for people or users to reason about, but you can also think about it in terms of percentage, like what is that percent between the current price and the stop loss, and having that always constant as the price goes up. So as the price goes up, the name trailing, it will trail behind, kind of like a trail boat. It will always be there, just behind that, just at the exact distance that you set. And the reason behind this is because, again, if the price is going up and you have a constant distance between the current price and the stop loss price, you can be sure that you'll always sort of exit in a profit in the case that the price does come down. So that's basically what trailing stop loss is.
That point when you talk about trading, it's just trailing as the price goes up, right? And then as the price falls, it's locked in place. So
exactly.
The trailing stop loss can never decrease in price.
Exactly.
Assuming we're on a long position here, but like it can never decrease in price. And then like once it crosses like that fixed price, then it just stop losses you out, right? Regardless what the LTV or whatever is. If it's, I think, if you've set the trailing stop up to be, let's say the price for token is $100, you've set the trailing stop at $10 below. So like the price goes up to 105, or you set it up at $100, your trailing stop is at 90, correct? Price goes up to 105, your trading stop's at 95, it goes up to 110, your trading stop is now at 100. But then if the price drops to 105, your trading stop is still at 100 at that point, right? And then if it crosses that and goes to 99.9, your trading stop is still at 100, and it closes it out. That's how that one works, isn't it?
Yes, exactly. I think it's interesting to talk about, like, how do you think about the trailing stop and stop loss as different? On the surface of it, it kind of seems like, well, why would you ever use stop loss when you can use trailing stop loss? But there are some circumstances in which, maybe you don't actually want the stop loss to be trailing, and maybe the difference between borrow positions and multiply positions in that regard. So yeah, how do you think about that? And it's going to be a decision point for users when they come in. They want to stop out, they want to have a stop loss, they want to be protected. Well, now they have to think, stop loss or trailing stop? So how do you make that decision?
Yeah, so I think trailing stop loss is just all round probably a much more valuable stop loss in reality. More so, and I'll tell you why who it's mainly more valuable for. It's more valuable for those users that are not doing much to their vault. So if they're using, like, say, a borrow position, and they're not that active and so on, you could like open your position at 60%. And have your stop loss at 65%, and you're pretty happy there. Like, it's only a 5%. But if you're in a period now, if you've opened that position in November, and we've had the kind of December, January, February, and now March like period that we've had, good chances are that your vault is probably around 20 to 30% now LTV. Like it has massively dropped, like a huge amount. In LTV terms, like you've got way more collateral now compared to in dollar terms compared to your debt, if your debt is in dollars. And the problem with a ordinary stop loss is it's still protecting you from liquidation, so it's still set at 65%. It's still stopping you paying any liquidation penalty and going all the way there. But the price would have to then drop another, like, if we're talking in ETH terms, probably another like $1.5-2 grand now. Like go back to probably 2K for your stop loss to kick in. And like that's where trailing stop loss really comes in. If you are not an active manager, if you don't have other automations on your vault set, like the one I was talking about before, about having it set at like kind of keeping it at 60% constantly, that 65% as a stop loss works great. But if you don't have those things there, then you're leaving your position like vulnerable to like a $2,000 price drop on the token. Before your stop loss kicks in. So if you had a trailing stop loss there, even if you set it at like $250, $300 or $400, like it doesn't matter how much the price goes up over like a 3, 6, 12 month period, however long this kind of run is going to last. if the price was to drop that $250 and you had a $250 trading stop loss, like you're at most going to lose that $250 from where, like per token from wherever the price goes. And I think that is the biggest reason. If you are not an active user or regular active user, trailing stop loss is 10x the power. Like it's got 10x the power of a regular stop loss. If you're really looking at it from a stop loss point of view, the way it becomes maybe less beneficial, but I still think I've had the same dilemma as well with my own position when we released trailing stop loss of which one do I want to put on, and a kind of disclaimer, I haven't actually switched yet to the trailing stop loss on this one.
Me neither.
But I have the auto buy stuff. Like I have a position. I have the auto buy like 58% to 60. So it's like regularly buying every time the LTV hits 58%, it rebuys to 60 or thereabouts. And my stop loss is at that 64, as I told you about before. But because it's always at 64, then that works. Like it's pretty good. Like it's always a thing. However, I'm risking a little bit more by not using the trailing stop loss, because as the price maybe increases, let's say it gets to 58.1% and so on. So it's gone up by a couple of $100. It then has like a 6% LTV it could fall before it's going to trigger. Now, if I had a trailing stop loss in dollar terms on, it would always be a constant value at the most. So it could get all the way to 58.1%. And if it didn't quite trigger that auto buy, then it would still maybe only need to fall to like 62%, because I've got like maybe $250, $300 set in that range. And actually it would probably save me like whatever 2% LTV is of a kind of net value of my position, for example, but it would actually save me a little bit more. So even in that circumstance, a trailing stop loss is actually probably more efficient in that case. And especially like I know I have a very tight kind of constant multiple kind of like target on the way up. So that it makes the impact different. But if let's say you had the auto buy at 55 to 60, suddenly you're talking about 10% LTV there. And that's where if you had a trailing stop, it would actually go, instead of 55 to 65, it would go from 55 to say 59, if we use the kind of same 4% range in price. So yeah, even saying this, I'm kind of like thinking to myself, yeah, probably actually I think I've sold it to myself in this conversation now. Like I'm probably going to change that to the trailing stop, right? But yeah, I think it's 10x, but I don't think there are many reasons other than just the clarity around the normal stop loss. Like it's so easy to understand as a user. It's a fixed percentage. If you kind of know where your LTV is in terms, you have this fixed price at all times, that the stop loss price that you can anchor to. But yeah. But going back to the previous conversation, I'd always do it to debt, regardless of
right. So this is even more interesting, because with our trailing stop loss, I think product lead on that, Frank, or I'm not sure whose idea it was per se, but it's a great one nonetheless. Is for me, it's great because you can stop loss and what's on the UI remain, which is, if you are in a Spark position or Aave position, you can keep the vault open. You can be in there and you can be earning yield on the collateral, which is cool. But in my view, the coolest thing is that you have this capital there ready to go. So it's just one click, especially on Summer, because it's one click increase exposure, or one transaction increase exposure. So you don't have to like open a new position or whatever. It's just right there, ready for you, ready to go. So that's, yeah, to me, that's beautiful. Like that's incredible. So yeah, I mean,
I agree.
Yeah.
Yeah, I agree. I think it's amazing. I think it massively adds to just the user experience as well of not having to kind of redo a deposit and so on. And yeah, like I said, I've stop loss multiple times in the last kind of 3, 4, 5 months on those dips. And I've always been in the debt token. I've had to swap it back to wrap staked ETH. I've had to redeposit the wrap staked ETH. Like it's been definitely levels of frustration there, and like the gas costs that I've had to spend on that. But it's still like the value of that for me still doesn't like cover the anxiety of like what if the market's having like a 40% pullback in one night? I mean, I know that feels now quite unrealistic, and so on. And I feel like,
Never know.
particularly DeFi and Ethereum, DeFi has matured enough to maybe not suffer such catastrophic things. Like, I don't know if we'll have another we'll have another Lunar Terror like UST event, or like there's more Celsiuses to go or whatnot. But yeah, it definitely feels like that much in one night that we had. I think pretty much on Black Thursday, right? Like is not there. But yeah, our anxiety. I've always found it fascinating that we have the same anxiety, but for completely different reasons, and arrive at completely different points ultimately. And this isn't the last time we're going to talk about like which token would you want to go to, right? Because we've got, like we alluded to it earlier, but we've just got a brand new kind of automated take profit, or kind of partial take profit, as we've kind of talked about it more internally, depending on how best it is to describe. And we have the complete difference of opinion there as well. But before we get to those, I want to talk about two others that we've mentioned actually a few times in this conversation already, and I'm going to group them together because they kind of work in the same way. But it's an automated buy and an automated sell. Can you talk about those a little bit?
Yeah.
Like, kind of, yeah. I mean, these are also the ones we talked about right at the start as well, being like these were the basic automations historically before Summer.fi released automation, right? But yeah, talk to us about buy and sell.
Yeah, so auto buy and auto sell are basically exactly what they sound like, although they may be a little bit counterintuitive for new people, or people who are just getting started with automation. Because what auto buy is as the price goes up by specific LTVs or collateralization ratio, or relative LTVs or relative collateralization ratios, you have a trigger. So a trigger at a specific price, and then it will take you to a very specific new or target LTV or target collateralization ratio. So basically, from your point of view as a user, you're just saying, hey, I want to keep buying. The price goes up, literally in other places, literally into infinity. So the price would go up to infinity, and you'd be buying up into infinity. And that's really cool. But the thing is, and I think this is great to talk about, is when should you do this? Should you do this? Like, how should you think about doing this? Like, these are the questions. This is the automation that I started with. And what actually happened to me was, this is around 2021, beginning of 2021. And similar to today, actually, the price of ETH went up a lot until around May. And I had this auto buy on and auto sell at the same time, which we can talk about in a second, which is supposed to protect you in this regard. And I was buying all the way up. And what happened? The price started to come down. And that meant that my position was at a really high risk. And even though in terms of the net worth of the position was really high because the price was going up and I was continually buying as the price was going up, it was in a fragile position. And this is the key thing. Is that, okay, now you have auto sell. And I also had auto sell on this position. And what auto sell does is that it sells your position to reduce increase your LTV or reduce your collateralization ratio. But in any case, reduce the risk of your position as the price goes down. And it's basically doing the opposite. It's selling as the price goes down. So your net result, if you have both of them on, and if you're not really careful around when you're doing them, how you're doing them, and the price that you're doing them at, like, you should be asking yourself, hey, do I actually want to buy at this price? And hey, do I actually want to sell at this price? Would I do that myself? And this is where thinking about automation, I think where Summer is really kind of beautiful in this way, and where we're thinking about it from a product perspective in this way is like, okay, are these things that I would do myself? Like, if I was clicking the buttons, would I do them? Or am I just pushing off this to something else? And it's easier for me to make these irrational decisions because I'm not actually doing them. It's some program doing them. And that's what we're trying to get away from. But anyway, we can talk about that in detail in a second. So that's what basically auto sell is auto selling on the way down. And the net result of this, generally speaking, is you just have a bunch of activity. You're spending a lot of gas. You've done a lot of trades, and your result is you might have just lost a little bit or lost a lot. So yeah, but maybe that's a nice like talking about like how summers is a little bit different. Yeah, we talked to customers. I was doing it myself at the time, and we realized that people were coming back manually and having to take off the automation at specific prices. So that's where we said, okay, we're going to put a threshold price to auto buy and a threshold price to auto sell. And all that is saying, just like I said before, hey, I'm willing to buy up until this price. So I don't know, I think the price of these today is around 4K. So you can put on your auto buy and you can say, hey, I'm going to only buy ETH until 4,500. After that, I'm not buying any more ETH. I'm done. Or I'm only going to sell ETH down to 3K. And you say, and that's where like a stop loss or maybe even a trailing stop is really nice, where because you can bundle those together and you can say, hey, I don't want to be out of this position down into like, let's say 3K, but below that, maybe 2,900, 2,800, 2,700, I want to be out, completely out. And you can put a stop loss and an auto sell together. So yeah, sorry,
Actually,
that's a really long-winded explanation. But.
no, that's perfect. And actually, like that was something I wanted to touch on, but kept myself when we were talking about the previous conversation around the differences between a trailing stop loss and a ordinary stop loss, and when you would use an ordinary stop loss. I was trying to wait until we had this conversation primarily around auto sell to kind of bring in the when you would really need to use or want to use that normal stop loss, because it's that normal stop loss with combining it with a automated sell that really works, and that's where I think the trailing stop loss doesn't work, because the trailing stop loss, as the price is going down, obviously the price is going down to such a way that your auto sell might trigger, but then the price might go further down before you stopped wanting your auto sell to kick in. So if you have your auto sell, for example, set, let's say, I'm going to keep using the 60% example, but 60 to 65, and every time it gets to 65, it LTV, it pushes it back to 60. But then you could have that, like you said, you could set that to say, hey, keep doing this until 3,000 ETH USDC. And then you have your stop loss maybe set to 67.5% or something, or even 66%, like a tiny bit further than your sell, and so on. So your auto sell is triggering until the validation that's actually verified at all times in the smart contract. So again, it isn't someone like, it's not able to be overridden by anything or anyone, but that like soon as that price is now, the price is 2,995, and you're above that 65%. Well, now like it's not going to do another auto sell, but actually as soon as it hits maybe 66% or 67%, boom, you're out. And but you see what you're kind of saying there is, hey, I'm out at just under $3,000. I'm out. I'm prepared to sell down there. And in reality, that's what I should be using, right? Like if I didn't have like kind of a more fear, I guess, or actually the fear of wanting to or needing to update my auto sell constantly, in some sense, because that's where I get worried. If I go away and don't look at my position for a few weeks, which is it can be pretty typical. Like even though we're working in this thing, and maybe I check it on my phone or anything like that, like I wouldn't actually like connect my wallet to the position for weeks at a time sometimes, just because I know it's working. And if you look at the last couple of weeks with the price going up so high, I don't want my auto sell like lowest price to stay all the way back there. Like talking about this now, I kind of almost need a trailing auto sell, right? If that's even a thing. Like I want my auto sell to work in a trailing way, giving me a slightly bigger band, and then the stop loss after that. But yeah, the engineers can kill us after they hear this conversation that we're talking about, right? Although several of the automations we've come up with on the product now are through conversations like this, which is why we wanted to record this one. But I think that's where the real auto sell really works.
So I have it's funny because I see the screen here and it's like I'm thinking about the IQ meme. You know, you have the 20 IQ on my side and the 200 IQ on your side. So bringing it back to like the 20 IQ view is like, okay, so I have this position. Like, let's say it's right now, right? Like, I expect the I expect ETH to be 10K in this bull market, let's say. And I want to have an auto sell and a stop loss together because, like, I let's say I'm gonna buy manually and stuff. I want to buy dips, all this stuff, and that would mean that I'm just saying, okay, I can keep myself in the market and be able to take advantage of dips by having an auto sell to a specific threshold price, let's say, and then I can have a stop loss. So in this sort of March 2020 scenario, I can just be stopped out, and let's say we'll even stop it out to dead just to make you happy. Uh, is that kind of the scenario in which, like, if I was setting it up today, I would want a stop loss or auto sell and a stop loss together to from the user perspective of being able, like, hey, how can I take advantage of this for the bull run from my own position?
Yeah, I think it's the big personal question there is whether if if the price got to 9,000, let's say, would you still be happy if you were stopped out at 3,500?
Right.
How would that would feel? Because or I guess it's the kind of like, what's the chances of it falling by that much as well? Because
Right.
there's kind of like two angles I think to try and balance here, and we can talk about like the kind of the two different things from like my experience, and then because I would be extremely disappointed to be stopped out at 3,500 if the position touched 9,000
Right.
ETH USDC or ETH dot, or just say ETH USD, because if you have that auto sell on down to 3,500, with ETH being kind of 4,000 as it is now, then that 3,500 is still set all the way up to 9,000. You see, so it's just going to sell all the way to 3,500, and then stop you out if ETH is going to all the way to 2,000. Now maybe you're already in a lot of profit at 3,500, so you're like hell with it. Like that's okay with me. For me, like I don't have auto sell. I've never used auto sell. I've only ever had stop loss enabled because of that irrational fear that if it got to 9,000 and it dropped to say 8,000, I would want to be out. And I have that irrational fear because in 2021 I didn't get out, and I kind of stayed in all the way through 23, and
Yeah. Me too.
kind of mainly at spot. Like I definitely closed the position to like collateral and so on. But like the regret I had of like when the prices started to drop, and I thought it was gonna it's just a drop. Like once X is finished, like it's gonna recover and so on, and it maybe did recover for a few weeks, and I was like kind of in myself like there we go, and then it would go again, and like we're obviously both like maker backgrounds and so on, and I know we're both kind of like follow the MKR price and things like that. And there was that period, right, where MKR was just like, oh, it's at 2,000. Oh, it's at 1,000. Oh, it's at like 700. And the ratio to ETH was just like it isn't stopping. It was a kind of Simpsons meme, like stop, he's dead already, kind of feeling that like I had whenever I looked at the chart. And like with automation now, I'm in such a different space, I think, in this market and so on. But for me, like we have quite a lot of users that use auto sell.
Yeah.
But for me, it's like my anxiety doesn't allow me to kind of use auto sell in a sense, and I put all my trust, which has never failed me, in the stop loss. So, but on the swing side, where I said I've been kind of stop loss like 4 times. I've then lost out on the value of ETH because then it's cost me more to buy back into the position and so on, and often it probably takes me a little while to buy back in, like maybe a week or two, and the prices keep going up. If I had that auto sell on a little bit, then I would be in a much stronger position now from a portfolio point of view than I would have been, than I currently am, basically. So that's the benefit of auto sell, right? Like there are definitely, like, if the market has a huge drop, I've got a big smile on my face, kind of I'm laughing in that sense. Like I got out as close to the top as possible in that sense. But when it's just a little dip and then it carries on again, I lose out every time. And that's
So if you
it's the kind of the opposite of what you said that you really want. Like you want to be buying the dip, where I'm
right,
literally
exactly.
I'm selling the dip every time.
Exactly.
And the
But
whole
so
position of it as well, right? Like
So that's kind of it sounds like the trade-off between having auto sell and stop loss. It gives you the optionality of being able to buy the dip, let's
Yeah.
say. But the trade-off is that you'd have to, like, let's say the price went way up. It's interesting from a product perspective. Like, maybe we'd have to send some type of notification or something like that that would be able to say, like, hey, like, this is like way different now. You should think about changing this or the settings or something like that.
Well, that's what I think actually, like, and maybe it's we speak to the wider team about it, but like, and I don't, maybe this is too niche as a product as well, perhaps, I don't know. But like that trailing, the trailing minimum sell price, I think is like potentially quite strong, quite powerful. Like you obviously, your bread and butter on the user research side, right? Like this is what you do. Like probably one of the things to maybe like look at and try and find out next is like, hey, would that actually be viable? And it's viable in a market like this, right? Like this is the kind of market for it. But it is fairly advanced, and that's why the trade I think we have to have with some of our automations, that we can make them more and more and more advanced to meet more and more specific goals. But then the number of users likely to use them is just like it's their funnel, right? It's getting narrower and narrower and narrower.
Yeah.
Like the net to capture those fish is a smaller and smaller net. Like you're almost on a single crab line at that point, hoping for like one in 1,000.
Maybe maybe a whale line.
Well, yeah, it can. But yeah.
Cool.
What are your thoughts on like the auto buy side as well? Like, because I know you've had
Auto buy.
like that's like we see that being enabled by users, and obviously in this market
Yeah.
it's getting triggered a lot. Like it's
Yeah.
kind of auto buy triggered, auto buy triggered, auto buy triggered.
Yeah.
But you've never been a fan, right?
No, no. I have a tumultuous relationship with auto buy. It's one, as I said, it's one that I started with, and so I would actually love to learn about how you think about it, because it's one that I would maybe like to use again, but like when you talk to customers as well or users as well, like you hear them like say, "Hey, I want to buy myself. Like I want to I want to be the one who's, you know, clicking the button in the market in the context of knowing what I'm getting when I'm getting it." And auto buy is obviously not that. It's buying you up. Even on Summer, you can set a specific price or a threshold price. But still, like, it's buying you on the way up, which is weird, I think, at least to me. But I do think, for example, with trailing stop loss and auto buy, there is a compelling reason to actually use it. Yeah, like I haven't thought too deeply about it. Like but I have been regretting it a little bit. For example, if you turned on, like in a risk adjusted way, like the risk is quite low, you could have turned it on in. Let's not talk about the bottom, but let's even talk about December, right? Where it wasn't. I think ETH was around 2,200, 2,100 around there, and it wasn't clear, at least to me, that ETH would be 4K today. So
Yeah.
very high rise.
Same with most, right? Like, yeah, I don't think anyone realistically saw it happening this fast.
Fast, right? Exactly.
Yeah.
Exactly. But I think it was pretty clear that we're in a bull, like in the start of a bull market. So you could have put on only like a relatively small amount of ETH, and you could have said, "Hey, let me put on this auto buy, and let me put on a trailing stop loss that's quite close," and you could have just let it run, and you would have been laughing today. So yeah, so I'm curious how you think about that, and also maybe like today you have to have a lot of knowledge to do that on the UI in Summer or anywhere else. So yeah, curious about how maybe that could be more clear to people to get started with a automation strategy like that, and how you'd maybe walk them through it to get started with something like that.
Yeah, I mean, so I was doing effectively a manual auto buy because we didn't so one of my main positions is on Spark, at the moment. I have like a wrap stake teeth die position on Spark, and I was just doing a manual auto buy. Basically, I had the rules in my head set up. So, and I've talked about this a few times now, but every time my LTV went going below 58%, I was just dragging the slider back to 60 and keeping it at 60. Now we have auto buy for Spark, so that's great. And I started doing that in. I was just looking at the history now. So I opened that position in October. Kind of open. Like I said, I closed it out once or twice. I think in a little bit of panic occasionally. Like got stop loss. Like the first stop loss executed in December, like mid December, for example. But yeah, I mean, I've kept it. I mean, I use it like. It's easy to say like the auto rate, it doesn't buy at the right time on like going up. It's kind of buying at the wrong times in some senses, unless the market is going up. I mean, every time the market is going up, like every buy I've had has obviously been at a lower price than the price is at now. For example, so like I'm in a very like happy position.
So wait, just let me stop you there for really quickly. It's like you, as you say, so like the price is the price is going up. And you're buying, so you're always in profit relative to the next price, right? That it's going to buy at.
Well, I am in retrospect. In retrospect, like looking at the chart and looking at my history now, they've all been solid buys, right? Because and that is always the difficulty, right? Same with the auto sells and so on, right? Like if the market dips and it can't climbing again, great to do an auto sell, not a stop loss. But it's always in hindsight. So at hindsight, these auto buys. So I've had like maybe 20 auto buys in these months, or like manual. Maybe some of them are manual and so on. But like I've had like I think about 20 like increased multiple actions on my Summer.fi Spark vault. That you look back in time and you think solid buy. Now in hindsight, I should have bought all of them like this time last year, like but like it works really well. It's keeping me at that 2.5x exposure. So again, that 60% LTV, 2.5x, like that's just like the number I'm personally anchored to, and it's been great. And ever so slightly, we're gonna come on to the final automation we've just launched, right? Which is the automated take profit, and we can talk about how these all combine together to make kind of one super strategy. In some sense, but still on that auto buy. Yeah. On, Jordan.
Well, the auto buy. So that's what I'm saying. It's like it's great until the price goes down. So like the March 2020 thing. Actually, that's what happened. March 2020 is that in February the price was going up, and then March we all know what happened. So the auto buy would have been great until, it's like the turkey thing. Like the turkey is getting fed until it's Thanksgiving, basically. So I'm curious how does so auto buy by itself is obviously a non-starter, but do you use it with trailing stop? Do you use it with stop loss? It sounds like trailing stop is the best one.
I use it with a normal stop loss at the moment. Although after the conversation on here, I'm probably going to update that to the trailing stop loss because I realise I'm at risk of a few percent potentially. But just for example, like my dynamic stop price for wrap stake teeth. So obviously it's not quite 1-to-1 with the ETH price, but my dynamic stop is around 4,400 at the moment. And the current market's at 4,600, so it's just under a $200 drop, basically. And at that point, I'd be stopped out to die in this example, and like heavily in profit on this particular position, in USD terms and in ETH terms. And that's the kind of confidence I have of also having this auto buy, because what that means is ultimately is I might get one buy wrong that then gets me stopped out if the market was to like top and then just keep going down then for kind of months on end. So it would probably only be one buy that leaves me kind of as a bad purchase, because I've got that stop loss kind of so close to my buys on there at the moment. So basically, I've into that risk model there. I've basically built in one bad buy. I've got one bad buy in there. Now, of course, because of the dips, I've had a couple of bad stop losses where like, if only it was 1% more in LTV, I wouldn't have been stop lost. I think I
Stopped
had
out.
one last week, right? Like where I, like it couldn't have been like I must have been so fine, like probably less than $1 or something crazy, to like it not being stopped out,
Yeah.
and it stopped out, and by the time I was like back available to rebuy in, the price was like higher than it was before the dip. Like,
Yeah.
so like yeah, like that's just like the way it was. But like when I went to East Denver recently, like so happy with my position because the automation was turned on, like, and I knew if anything, and if the market had anything happened to the market when I was away, like I was either in or I was out, depending on which direction it went, and I was making the most of it either way round, basically.
Yeah.
Except if the market had dipped and then had a massive rally, I'd have obviously got out. I'd have been out,
Yeah.
and
You'd
then
be.
it
Yeah.
and then it would have shot up. But that's
Mm.
that's like I am much happier with that risk than going away thinking I'm like 4 days away from being able to do anything. If there's a huge market drop, I
Hmm.
am stuck.
That's that's pretty interesting. I mean, you could even. I mean, this is way off topic, but having an automation that stops you out to debt, for example, and then it continue like it buys over time or something with the with the
Yeah.
um with like let's say you swapped out to USDC and then you could buy ETH over time to get back
Yeah.
in.
Yeah, I mean, there's a
Um,
lot of different things you could do in there. Like you could stop out to collateral in your vault, for example. Like almost
mm,
stop out to 1x, like stop out to spot if you're as like a first step, and then have a secondary stop loss, which then goes to debt if the market was to continue falling so
that
much.
would be great.
Although there we're just basically recreating the auto sell because you just want the auto sell to kick in and then the stop loss. But again, you risk the auto sell a little bit if there's a huge rally when you're away. Like you could probably have a trading stop loss with that actually, because a trading stop just makes sure you get out regardless. So maybe your auto sells kick in, it keeps you in, but your trading stop, yeah, it doesn't really affect it too much. Like you maybe don't
Mm,
even need your auto sell on at that point because you've got your trading stop on anyway. So it's kind of a pointless to have auto sell because you're
mm.
not out of your position in the first place. That's super the killer strategy on summer, and ultimately why DeFi is better on summer with
Yeah,
like a combination of kind of like three or four of these strategies combined, ultimately ending in automated take profit.
yeah. So I think two brief stories to get it to make it hit home is so one is a personal one, one is from a user. So the end of the well, I didn't know at the time what it would be, but the end of the bull run, the last bull run, I was using Summer, and these positions were going great. It was really nice, and I don't think we even had auto take profit the previous version at the time, and so I had no way to kind of take profits. It was kind of I mean, I guess I could, but it would have been really manual. And of course, what we're talking about is being able to automate your decisions. So no emotions really. Maybe you can have emotions in the setting it up, or you can think about both rationally and from an emotional point of view how you want to exit or do something. But the contracts are just going to do what the contracts are going to do. Nice and clinical, like clean and clinical was what they're going to execute them, and so for me, there was no really any way to do that, and I definitely got maybe caught up in my emotions in the end of the in 2021. So I didn't end up really taking any profits, and we all know what happened in 2022 and stuff. So having some way to like think about being able to take profits over time is really important. It's a very important thing. It's hard to do in the moment. Speaking from experience, when everything is seems like everything will go up forever. But auto take profit is a way to automate this to have it that you set it up, taking profits little by little over time, as much or as little as you want, at the very specific prices or LTVs that you want, set by you, and you can think about that. And we make it really nice and easy to plan it out on the UI and stuff, and we give a forecast of what the prices will be and everything. or the trigger prices, which we'll get into how it works in a second. And the other part of this is not just the taking profit part, but the like how much profit you're taking, that part. So the user sort of story here, or talking to a bunch of users, is the one story that sticks out in my mind is talking to somebody and they were saying just doing this. Say, hey, what do you think about these automations? How are they working for you? Is it easy to set up? Do you understand them? These type of things. And they went to the auto take profit on Maker, which is still this sort of legacy one today, and they clicked on it and they're like, "Ah, this is not what I thought about auto take profit. Like, when I think about taking profits, I think about 20% of my position, 30% of my position, whatever. Like, the auto take profit as we had it before was basically like the opposite of stop loss, pretty much, which is not what people wanted, because you're taking a very definite view of the market. You're saying, hey, I think it's done here at this very specific price, which nobody knows. And that's what auto take profit is you're saying, hey, you can set a starting price where you want to start to take profits, and you can set a withdraw, what we call a withdrawal step, which is really just your profit size, like how much profit do you want to take. And then you can set a trigger LTV, which is basically just saying after that initial price. So let's say, I'm quite bullish. Let's say 10K ETH USD for me. I want to
Quite
take,
bullish.
I want to take, have a nice withdrawal step. So I want to take a good amount of profit at that time. Maybe quite a bit of my position. And then after that, I want to say, okay, maybe at every time my position hits 40% LTV, or I don't know what the multiple of that is, like 1 point something, maybe 7x or something like that, 1.7x, I want to take a little bit of profit over time into infinity. And we all know the price is not going to hit infinity, but it's just saying at some point it will be stopped out because the price is going to go down. So I'm capturing profits little by little over time, and I'm being protected on the downside. And I'll be, myself, I'll be stopped out to ETH when the price drops. So I'll be having captured a bunch of profits on the way up, and I'm protected on the way down. And that's basically auto take profit.
Thanks. So I was just actually opening my position that I've got it set up on. But it works by withdrawing the collateral, right, from your vault. So if you've got a position in there, and every time this triggers, it takes kind of a collateral out of your position, and it sends it to your wallet. And in that send, it can either convert it to that token, so like DAI or USDC in most cases,
Yeah.
or it can send it to you in collateral terms. And you'll go back to that same conversation we've had a number of times now, and so on, mainly around the stop loss and so on, right? Where I know you want to take your profit in collateral terms, right? And I'm sat here saying, like, no way, like it's got to be the debt terms, it's got to be the USD like equivalent token, or whatever. But it does work really nicely, and we obviously ran the simulations and so on when we were kind of coming up with how it would work, and obviously you were user testing it with users and so on. And again, I'm going to anchor to this kind of 60%, 2.5x position, and kind of one caveat, because I think it's important in the current market, that like some of the simulation values I'm about to say, like ignore the stability fees, or whatever, and the price only has to go up by around 40% for you to have your entire kind of principal, like your entire deposit, basically back in your wallet. So if you've deposited 100K in dollar terms into a position at 2.5x, the price only has to go up by around 40% for you to have about 100K back in your wallet. So and I think one of the nicest ways I kind of realized this last night when I was kind of writing this little tweet thread about just kind of how it works and so on, because I'm personally so excited about it, mainly because I'm so excited because I've already turned it on and using it. But like how I thought about this is you can get out while staying in. So like you're pulling out of your position while maintaining that exposure to the market the whole time. And the way it works, if you've got that 100,000 like USD net value exposure to the market, whether it's in ETH or BTC or whatever, let's use 100K as an example again. But if you've got this 100K example, every time every time it's firing and it's triggering, it's leaving you with $100,000 of net value in your vault. So it might go up to like 105,000 or 110,000 and then trigger, and it will withdraw basically $10,000 every time, for example, in collateral terms to your position. And that's the really nice thing about how this is working as well. Regardless of whether it's collateral or debt, if it's a USD based position, the amount in dollar terms that it's withdrawing every single time is a constant. So let's say it's like $10,000. It will always withdraw $10,000 worth of collateral, but obviously the amount of collateral it's withdrawing is constantly getting less. Your debt is obviously staying the same, increasing slightly if your borrow rate is positive in there, that you do have to be just a tiny bit mindful of. But yeah, you have always got like this approximately $100,000 exposure to the market. So you're always staying in the market. You've always got this exposure to the market for any further gains, and you're just taking a little bit out on the way up. And yeah, like I said,
Yep.
I've turned it on, and I've got it like personally. I've got it set up with I've got 3 automations enabled on here now. So I've got my stop loss. I've got my auto buy. I've got my auto buy up to about I think it's about 4,500 ETH USD, and then the take profit starts at 4,500 USD as well. So as soon as that 4,500 USD is crossed, I've tried to convert it into ETH terms to make a little bit more sense rather than the wrap state ETH version. But as soon as that price is crossed, I stop buying and I start taking profit. And that was
Wow.
the only mental bit I had to consider as like, when do I want to stop buying and start selling, basically. And
And you decide to
it's
have it
already at
close.
all-time highs, right? So I think.
Like you decide to have it close, which is interesting. Like you could have, for example, said had 8K to start taking profits and 4K to stop buying.
I could have done in my mind. In my mind, the crossover point is exactly the same. So as soon as I feel like I'm done buying, I'm kind of then ready to start selling. In
But you're not selling; you're just withdrawing. Ah, well, but you're taking to debt actually, so you are
yeah,
selling.
yeah. And I just realised we're not quite at all-time highs yet. It actually got to 4.8, not 3.8, or there or
Right.
thereabouts. Back then, but yeah, I'm selling the collateral to debt, so to dollars in the wallet, and so on, because in my mind I've still got the exposure in the position, so I'm
Right.
limiting downside to any collateral drops, because I've got those, as I mentioned it before, but maybe this has been all cut up and so on. But I have a number of other ETH yield loop positions as well. So
Where you
I'm
have the ETH
effectively kind
exposure.
of like, I'm kind of like in the ETH spot market in some senses with those ones. So I kind of remaining in the market with the ETH regardless. So for me, it's very safe in the knowledge that I've got this. If the price continues to go up, I'm taking the profits to dollars in my wallet. Maybe I could do something with those one day. But that 100% like kind of profits going in there, maintaining that exposure to the market. And in a worst case scenario, I've got the stop loss set up just a few percent away as well.
Right.
Still to die. And that's why for me, this is like
It's
I'm
the holy
riding the
grail
wave
for
up,
sure.
getting to kind of the all-time highs that we got to before, and then kind of saying, hey, anything above the all-time high that we got to before, I'm going to be selling at, and slowly kind of like kind of unwinding my position, but again, I'm maintaining that constant exposure. Although I'd quite like borrow rates to not be at 20% if I'm honest with you, like 15 to 20% as they are currently in the market, because that's a bit of a killer.
I think Summer in the past has always been known as the like, if not the best, one of the easiest and most like awesome UX experiences in DeFi, for borrowing, for multiplying, things like that. But now I think with you should think about Summer as one of the best places to get automation for your position, as well as all the awesome UX that we've had in the past as well. So really, yeah, really improving, which I think is great. Is great to see. So
Yeah, totally. I mean, we talk a lot recently, in particular, around how DeFi is better on Summer, and like I think we've just spent the last kind of hour and 20 minutes really kind of giving just one small example of how much more powerful DeFi can be when you
yeah,
have automation in there. And I think the one thing we talked a lot about in 22 when we were building these things for the first time. And interesting, we haven't really talked about here, but it's just it's taking the emotion
Yeah.
out of position management, right? And I think that's one of the biggest things. But and from our job point of view as well, like how can we remove emotion from and stress from managing a position? And yeah, I think we did it. I mean, and this isn't the end of the automation strategies either, right? Like we have a number more kind of still in the works and being worked on at the moment. I think, Jordan, you've been working or trying to think for a while about how we can even a buy the dip strategy, right? I mean, I think we've got drawings and charts somewhere when we simulated the take profit one, how like you had the take profit below or like just above, if you think of like the LTV going up the side, up the kind of the y-axis in a way, but like I get confused now, the axes, but up the side one. But you have your kind of area for the take profit, and then you have a kind of buy the dip area, and then you have your stop loss in a worst case scenario. And how that can kind of how we can make all that work basically as well. And then there's the automated kind of DCA strategies, kind of combining with all of these, even like I said, automation into earn strategies as well, and how you can potentially automate the rebalance in the different markets between kind of moving to that kind of maybe the ETH yield loop position, and then as the markets are doing something clever then or good, moving more into the buying kind of strategies, I guess, in the way up strategies. But yeah, it's
absolutely, it's exciting times for sure.
Yeah, absolutely, and that's one of the few things we agree on when we're having conversations about automation, right? Like we agree that we want to use the same products. How we use them sometimes differs, but ultimately we always end up with the same goal, right? And that is kind of happiness and relief, and a lack of stress, because these contracts are managing the positions for us. Cool. I'm just quickly like zooming through the notes. I think we've probably covered all these different bits and pieces. Hopefully this has been enjoyable, and it's been enjoyable to listen to as well. Have you got any final notes about automation around using it? Like, if there's one bit of advice you could give on Summer and automation, what would that be as a kind of closing comment?
Take your time on the setup. Really, don't feel like you have to be. I mean, I think for stop loss it's okay to set it up rather quickly, but if you're going to combine a bunch of them together, like one thing going through this has come to my mind is we should definitely create like different tutorials that we can give out to people or have for each one of these, and being able to get set up. And I would say like, take your time getting set up, because just as you said, we're taking the emotions out of this. So it's fine to be rational, take your time, sit around, think about it, and get set up, because you're going to be in it for the long term, hopefully, with these different automations, and that's why you have them in the first place, so that you're not going to make irrational decisions that get you out of your position either too early or too late. So that's what I would say. What about you?
Yeah. I think our aim is for you as a user not to have any regrets. So I agree with Jordan. Like, take your time setting it up, because the worst thing you can do is have regrets. And ultimately maybe going maybe too bullish on the take profit. I'm gonna have a word with Jordan after this about his take profit start at 8K. Other than that, I think that this has been amazing. I think kind of following on that theme of kind of like DeFi is better on Summer, automation is better on Summer, and everything is there. I think a final note, we probably should have started with it in reality, but automation is available across Maker, Aave, and Spark right now. Stay tuned to seeing it on Morpho and Arduino as well. That won't be too long. It's also available for Aave on Optimism Base and Arbitrum as well. If you've potentially either got smaller positions or even want to keep that constant multiple really, really tight. But thanks for listening. If you've got any questions, hit us up in our Summer Discord or even on Twitter. Thank you very much. Thank you, Jordan.
Yes, thank you. It was great.
Awesome.
Cool.